Well, I think, Karen, good morning, and good morning, Steve. What we've always said is we had a very big gap in our portfolio, so to speak, as we were not involved in the United States. And we've been looking over many years to figure out a way to get in there at a way that would reward our shareholders over the long term. And clearly, we've been talking with Westrock for a period of time, and we've known the company for a long period of time. And we identified it as an asset that we can develop with and combine with to be an even better asset. And so, after a long series of negotiations, we finally got to an agreement at 7:15 this morning to finally close out this deal, which I think is going to be fantastic for our shareholders in the long term, in the medium term, and the short term. I think what we're doing is we're combining, a company like Westrock was really at the beginning of its transformation with Smurfit Kappa, which is in the middle or towards the end of its transformation, in the sense that we've done a lot over the last number of years, and we think we can do a lot combining with Westrock to make both companies a real serious player in the world. We'll be the largest by a factor, and as you said earlier, we intend, because about 65% of our revenues are going to be in the United States and Latin America, we intend to list there as a primary listing. And clearly multiples and how we and the pool of capital over there is bigger for companies like ours. And I think, Steve, you said it earlier that we're an unloved sector, but we want to make ourselves to be loved. So, and I think this is a good way to do it.
Tony, as you step out there to woo investors then, and particularly from the US market, you've got a combined group now, $34 billion in adjusted annual revenue for the past 12 months from your two companies. How quickly can you grow the business from here? Because we know it's been a somewhat bumpy cycle on the back of the COVID era, where there was huge demand for packaging versus a slightly lower demand environment at this point. So how can you grow the business from here?
Well, let me say, first of all, that this is a great business. We're in a sustainable packaging sector. And, long after we're gone, Karen and Steve and me, people will be using packaging and all the packaging that this company, Smurfit Westrock, will make. So, this is a very, very good business. Obviously, what we have to do is run it well. And I think in Smurfit Kappa, we've proven that we've been able to run our business well over the last number of years, despite all the bumps in the roads, ups and downs. And we've grown our business, we've reduced our debt, we've increased our margins, and we've made sure that the company progresses forward with very good acquisitions. And this is just another transformation, if you will. Putting these two companies together is going to be very exciting for us, and it's going to give great opportunities for all the Westrock employees to continue to grow with this company, and there's significant cost reduction opportunities that we can take going forward.
Tony, I hear everything you're saying, and yeah, absolutely. I think it's an unloved sector. I think it's a sector that, I think this has amazing potential going forward as well. But let me I'm going to be a real pedant to start off with. Tony, this is a takeover, not a merger, isn't it?
It's a combination, Steve. We believe that both companies have incredible opportunities in their very respective businesses. So, obviously we are paying a premium. So therefore, the positions reflect that. I think that we're very happy that, we're going to keep the best of both companies. And as we've done when we merged Smurfit and Kappa, it's a combination, and that's the way we think of things.
So as part of this, so you're giving $5 in cash for each one of the Westrock shareholders as well. Just a little question on the financing, Tony. One of the reasons why people don't buy companies at this stage of the cycle is because, of course, the cost of financing has gone up across the world. Very manageable, that extra cost of financing?
I would say so, Steve. Absolutely. All of our debt is fixed. This 1.3 billion additional is a relatively small amount in the context of the size of the company. So we have that all committed. It's done and backed up by our banks. And so therefore, that is a relatively small amount of money in the context of the size of the company.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.